Happy New Year, everyone. It's Ken Angst here with the Angst Real Estate team leader of the Angst Real Estate team, and your host of my weekly real estate podcast. Coming up on the end of the year for 2021. So I thought we would bring one of our special guests in that's a relevant contributor on our podcast, Elena Bolin. How's it going?
Good morning.
Happy New Year.
Yes.
Coming up. So we're New Year's Eve. So we're rolling out. And what we're trying to do with this podcast is going to be a little bit more lengthy, but we're going to try and give all of our subscribers, customers, all of our peeps out there a heads up on what they should be doing to get ahead of the other people out there as we roll into the new year.
Right.
You ready?
Yeah, ready.
Okay, let's do it. So, like I said, a little longer. What I'll do, though, is break up the videos below, and you can actually click on the ones that are relevant. So we're going to cover buyers, sellers, move up people, downsizing, and a whole realm of stuff, and kind of just get it out there so people are thinking about it before the end of the year. So first thing is, let's talk about mortgages. What I want to talk to you about is people who still have a mortgage that they had from 5 or 6 years ago. The interest rate's high. What are the rates, and should they be considering talking to you about refinancing?
Sure. Rates on conventional loans are in the low threes right now, in about a 3.25% range.
Okay.
Those are conventional loans. So that means you're not a USDA loan, you're not a FHA loan, you're not a VA loan. So that is conventional conforming loans. Government loans are still running a little bit lower. They always will, because you have to remember government loans are backed by the government. So any bank that lends you money on that property that is backed by the government, if you ever have a foreclosure or a short sale, they will reimburse that bank essentially. So they're backed by the government, in turn always giving you better interest rates.
Better interest
for those.
In this case, like a 0.25%.
Oh, yeah,
so 0.5%.
Yeah, so they're in VA is always going to be the most competitive product. But if you're looking at a government loan, you're between 2.5 to 2.875, just depending on your credit score.
Okay, so take a look at your current rate. We're about 3.25, 3.5, and get it done. We have a lot of customers out there that have been sitting on 5% interest rates.
Yes.
Please don't do that. If there's no sense, particularly if you're going to stay in the house, obviously you're going to sell. It may not be the best idea, but you can always give Elena a call and get in here, and she'll give you the straight story. So
a big thing with that too is to know that a lot of people sit in those high rates because then they think they have to start all over again with their mortgage. We have every amortization out there available. We have a 29-year, 28-year, 27-year, 26-year, and certainly just lowering the interest rate gives you more money towards the principal of your home every month that you're working so hard to pay into.
Excellent. So, and then keep in mind that what we're talking about, these are tips for current homeowners. So we want to give everyone out there a little head start to 2022. So check your interest rates first thing. The other big thing that we're seeing right now, and I work with a lot of vendors out there that are a little light on work, believe it or not. And I'm talking about painters, plumbers, electricians. A lot of our people are calling me saying, hey, do you have anybody that needs a paint job here in the next month or two, just because of the weather? So if you need interior projects done, it could behoove you to get it done now, and don't be one of the people who are in our list that waits till April.
Spring break.
Because once that hits, people are starting to move and it gets really busy. So if you're listening to this podcast, all you do is text us, respond in the message below, and of course we always work with the top vendors, and we'll give you a list of people that can help you. So get those projects done now that you're thinking about. The other thing is that, we talk about this a lot in the course that we're not attorneys, but you need to consider if you have any kind of assets, probably anything above $20,000, especially if you own a house, have kids, get a family trust. One of the biggest things I see is people don't have trust, they pass away, and then it's up to the state probate to determine where your kids are going to go, where all your accounts are going to go, and how they're broken up. So short circuit that. I'm just telling you that, for $2,000 to $3,000, I know it seems a lot, but consider getting a family trust in 2022. Again, we have two of the best in town. They're pretty reasonable, and it really helps out if something ever happens to you, particularly if you become incapacitated for some reason, like we had one of our clients happen. So
Right.
Family trust.
That's huge, just to put on your list of financial goals. I know I have a lot of clients talking to us right now about their financial goals. And I love that you brought that up, because I know when you're a realtor for somebody, you don't just sell them a house and leave. I love that you continue to talk about these things and walk people through all these steps.
And it's just because we've been in the business, we see all the people's path through life.
Right.
And sometimes bad things happen, unfortunately, and I just want to make sure that you and your family are protected. So look into that. And like I said, we have 2 of the best attorneys. You can call us and I'll feel free to give you those names. The other thing is, make sure you have a homestead. If you work with Elena and I, we always make sure that that's either set up by the title company or prepared. And when you buy your house, I have a lot of people who we prepare it, get it ready, because a lot of the title companies don't record it, and then they don't record it.
Right.
So again, I'll put a link up above. I did a podcast on how to do it. You can almost do it yourself. It's better to have someone, an attorney or a title company, look over your back and make sure it's prepared, but make sure it's recorded. The other thing I'd like Elena to talk about is when you refinance, what happens to your homestead?
Right. So lenders require that you take it off for the purpose of the loan, and then after closing you put it back on. But a lot of people don't follow through and actually have it put back on, and that's really important, because if you took the time to get that homestead completed and you want to protect your home, you have to make sure that those steps are completed in full after closing or at closing.
Or it's no good.
Yes.
It doesn't do any good not to have it recorded. And what a homestead is it's just another insurance policy that luckily we live in a state that has a liberal amount. I think in California it's less than 50,000, but in the state of Nevada it's 605,000, I believe. And what happens is it doesn't protect you against anybody in the past, but if you have any kind of issues, legal issues that someone could file against your property, at least you have that in place, and it can prevent them from forcing the sale of your home.
Right, and that's real important for our specific community. We're small business friendly. If you're a business owner, you're always at risk for a lawsuit, and that's why, again, that's so important as well.
And we have a full podcast on it, and feel free. I'll put the links below in the YouTube, and you can click on it and find out more information, or give us a call. We're always available for lunch. The next thing is that there's mortgage fraud going on out there, and I think Elena probably can talk about this a little bit more, but there is a trend in the United States to people doing nefarious things like going in and recording things against your home. Can you kind of go into that more, what that is or what that looks like?
Right. If somebody is able to capture enough of your information, they can apply for a mortgage in your name and get that recorded against your property without any of your knowledge. There's some, give and take with technology these days. The online closings where they do a virtual close, e-recordings are wonderful, but a lot of it just puts you at risk for things like that, especially someone putting in an additional mortgage against your home. So it's really important to keep an eye on that by signing up for those notifications.
All right, so we'll put the link down below. Look in the bodies of these emails or wherever you see this on social media. It's the Washoe County Recorder, and it's like literally a minute. You go in there, you put your name, your address, your email address, and then I think you have to put in different names that you could be potentially called. You hit the button, and now every time someone records something against your property, you instantly get an email, and you can say no. What you don't want is to sell your house to find out you have a $300,000 bogus loan because your deal's off at that point because you got to hire an attorney and get it removed.
Right.
So another service that's out there, take advantage of it. So now we're going to move in. So those are existing home buyers or existing customers that aren't going to move in 2022, but we want to make sure that you have some goals that you're looking forward to getting wrapped up. Now we're going to move into some tips for specific individuals. So first one I want to talk about is on our list here, Elena, is buyers thinking about purchasing in 2022. Right now it's a little slow. The market's kind of tight, as I discussed in my last podcast, but it'll pick up here in the springtime, and we just want to make sure that you're ready. So first thing we always want a new buyer that comes to us to do is talk to a lender. Why should you talk to a lender, and why should you use a local lender like yourself?
The number one thing is to start early. A lot of people think, well, I don't want to purchase a home until April, so I'm going to wait until April. The earlier that you can get a conversation going with a lender, the better, because we can help you prepare in ways that are going to save you money and increase your budget if that's what you're looking for. A lot of little tricks that you can work on in terms of how you file your taxes, in terms of what debts you might be able to pay off. Some people think they need to pay off a collection account when it won't even help them, but it may behoove them to instead pay off a small credit card. We really like to be able to advise you on those things and kind of get in the weeds with you on the planning, because the roadmap is the most important part. So again, earlier the better.
Yeah, so all great points, and we'll get to more here. So, and then also, you know, a lot of people want to use different online lenders. I'm here to tell you, if you're in a competitive situation like most of our deals are here locally, if you don't have a local lender, it could cause you to miss out on a deal.
Right, and to touch on that, I just advise local for this main reason. For you to have the ability to walk in and look someone in the eye when you are working with them, it might not seem like a big deal anymore with how much of all of us are using computers and technology to obtain home loans and car loans, etc. But when you're talking about your home and an online lender that starts with a Q, for example, if you go to them and they get you through the 3rd week, and on the 4th week you're supposed to close escrow and they decide they can't do your loan anymore, they don't have to look you in the eye and tell you that.
No, they just won't respond.
They just send a denial and they're done, and they don't try to help you with what to repair. And I think that's a big disadvantage for the online lenders, just that lack of human integrity and caring about the clients that we deal with here.
Yeah, and 2 more things. Why not support someone that lives in your community?
Right.
I mean, we're all small businesses. Support someone in your community.
Yes.
Just because it helps everyone else out here and helps us grow. And then, you know, if it kind of hits the fan, then you're able to go in here and talk to them. And it's someone that a lot of people, if you put Elena's or any of our other lenders on in the file, they'll know who it is.
Yes.
And that does win us some contracts. So believe it or not, it does.
And to make a joke about that too, I tell everyone, I want to get your loan done and see you at the grocery store and not have to hide.
That's right.
That's why we don't do adjustable rate mortgages and little things like that. We want to feel like we did a good job for you and be able to be your neighbor.
So the other thing that you need to know if you're a buyer are the new conforming limits.
Yes.
And I think Elena's going to talk about that. There's new limits out there. What are they? And I think it's going to make it more competitive, actually, because all the limits what are they currently?
Right. The conforming conventional new loan amount cap for Nevada is $647,250.
Wow.
Which is a big jump up from the $548 that it was. So of course, Ken, just touching on it, making it more competitive, this just makes it more attainable for more people to get a conventional home loan versus going over that jumbo loan threshold that brings in so much more constrictions on loan qualification. So I think that's a great thing for all of us, and it has been needed for some time here. Another increase that we've had is FHA. FHA, the new loan limit for that is $537,750. That I think is probably a little bit more important because FHA is a great product for first-time buyers or people that may have a little bit of a credit challenge. That just opens up new doors for them, because before, with it being so low, it just made it impossible for anyone to be able to afford a home in our area. This, like I said, is just going to make it a lot easier for many more buyers to qualify. Another part of that too is that Fannie Mae and Freddie Mac, the governing entities behind conventional loans, are buttoning up what they call approve eligible findings for us as lenders. So debt to income ratios are a little more lax on FHA loans as well. So if you're worried about maybe you have too much debt, FHA might be a better option for you. And now that loan limit helps you achieve that.
So there's gonna be more competition though.
Yes.
So keep that in mind. Anything over 500,000 now, up to 530. What?
537,750.
So there's gonna be more competition. So another reason you gotta get all your ducks in a row early. We'll give you the head start before these other people get in there. So we already talked about getting into talking to Elena, fixing any credit blemishes, making sure you're talking about things that you have to pay off to make your credit score. So if you're doing this last minute, you can't do it. So right now, if you're thinking about doing it in the spring, get in, get pre-qualified, and this whole process of getting pre-qualified helps the realtor and yourself determine what you can actually afford. Because a lot of people come in and say, oh, I can afford $1 million home. Well, no, you can't, because of different restrictions. And then the other thing is make sure you know the tax rules. The biggest thing is if you're self-employed, you may have to file some tax returns early.
Right.
So we're trying to get you out in front and make sure that you're ahead of the game.
Right.
Any comments on self-employed tax? Because you have to have 2 years of tax returns. So if you're looking and you've been waiting, you might want to get the tax return in. Obviously, you want to talk to an accountant or CPA. We're not those, but
Right.
any other comments on that?
Just like you mentioned, how you file your taxes as a business owner or self-employed person directly affects how much you will qualify for. I know a lot of us want to write off all of our expenses, and
Some
of
cases
course,
that's something.
yeah, that's an advantage for sure as a business owner, but you have to know that your qualifying income is the net after all of those write-offs. Whereas if you're a W-2 wage earner, you get to qualify off of your gross income. So it's give and take in that way. So that's why it's definitely important to talk to a loan professional before you file your taxes, if possible, so that they can just tell you and help you with some strategies.
Work with your CPA to get to put you in the best position.
Right, right.
You may not want to write off all this stuff or do a full car depreciation in the year you're trying to, because that's going to limit the amount of money you have. So keep that in mind. Once you talk to Elena, then you contact your favorite realtor, hopefully the Angst real estate team, and get the process started. But typically, we always recommend that you talk to a realtor or a lender first. So if you're thinking about buying just a normal. We're gonna hop into a little bit more advanced, and I'm here to tell you, and I apologize in advance, this is not my favorite thing to help people with because it's a challenge, but we do it. So it's move up buyers, and what we're talking about is someone fortunately bought 5 to 7 years ago, and we come across this lot, have $200,000, $300,000, $400,000 in equity in their home, and want to move up into their new dream home on the, for example, Mount Rose Highway, Collin Ranch, Northwest Reno. So it is a challenge. I'm not going to lie to you. It's not for the faint-hearted, but it can be done, and we'd love to help you on that front. Obviously, the first thing you want to do is you need to form a team.
Absolutely.
And the team is a little bit larger when you're trying to do one of these. You got to have a realtor, obviously. You got to have a lender like Elena. You got to have an attorney and probably an accountant, because there's a lot of things in play when you're trying to move up. For example, you need to know the tax consequences. We get a lot of people who have had $600,000 equity jumps, and you got to know that if you're married, you got to know the limits, because if you go above $500,000, and it could change. Of course, talk to your CPA. I'm not a CPA. You could be triggering some pretty significant tax problems for yourself.
Right.
So you need to know the tax consequences of selling a home, particularly when you have that nice equity that you've built up. Make sure that you know from a CPA's perspective, 2 of the last 5 years, what is the definition of primary residence? We see it, not our clients, because we always advise our clients to talk to a CPA, but we see a lot of people selling before owning it for 2 years, and then it's not qualified as a primary residence. And I'm telling you, the IRS loves you, because all that equity you build up, they're going to take a significant chunk.
Yes.
So if you want to know more about that, we have several CPAs that are top-notch that deal specifically with real estate, but you got to know that. And then also make sure you know the tax limits, single versus married, to avoid capital gains. So there's a lot to talk to an accountant before you start hopping into the buy-up.
Yes, definitely ask them specifically about, sorry about that.
That's the beautiful thing about doing live videos is we're just going to keep going, but Elaine is busy, so that's good.
Yeah, just keep your focus on finding out, what is it going to cost you in taxes if you do decide to sell and move up, and make sure you're specifying the questions about those capital gains. Because
I can tell you that I know several people personally who have benefited, above the tax limit, and if they sell, are going to be taxed a significant amount. So you need to make sure, and that's another thing, you talk to your accountant, because they may be able to do some other stuff to offset some of those gains. So more for move-up buyers. We have different options for you when you're trying to do a move-up, and we won't go into all the details. We did a pretty in-depth discussion, but we're going to do high level to give you some ideas to think about, and then if you're more interested, you can go to lunch with Elaine and I, or come in and talk to us. So you can do a regular sale and move in with someone else. So if you own a residence, and I've had a client just do this, is they say, older house, we want to move to a different house and get something newer. So what she did was she sold her house, and she's moved in with her relatives. So in that way, this is probably the cleanest way to do it.
Yeah.
Because there's no contingencies, and then you have all the money set aside, and then you can go. Some of these other have in-depth contingencies. Any comments on doing a regular sale? I mean, the downside is you got to live with your relatives or your family, so that's kind of a downside.
Right. I just feel, from what I see, if you are able to pull off a plan like that, then you're just more competitive as a buyer, because you don't have the contingencies sitting on your offer that has a big red flag to the seller that you're trying to get an offer accepted with, that says, hey, I have to sell this house first, or hey, I have to sell this house, but it's an escrow, but I don't have it sold yet. Because there's so many wild cards in play when you still have that contingency in place. So definitely that plan is going to give you...
That's your cleanest way to do it.
Yeah.
And most competitive way.
Yes, absolutely.
Because if there's 6 people, 10 offers, if you're a contingent offer, it could be tough.
Right.
So the other one is you can sell contingency. So you can write something in the clause that says, hey, buyer of my house, I have 30 days to find and be in contract on another home. But that's a reverse contingency. That's asking someone that's buying your house to wait 30 days for you to get into one. So that could be a tough way, but that's one of the ways that we did it recently. It does work, but you have to find someone that's not in a rush, and find someone that has the ability to, because what they have to do is wait 30 to 45 days, and then all the requirements in the house go for another start. You start the appraisal, you start inspections. So someone that's doing that is buying your house, they have to be very patient.
Yes.
So not ideal, but it is another way we do it.
Yeah, and I feel like that is a good strategy for some buyers too, to know that if they offer that, they might be able to get in a home. So it's give and take on both sides.
That's an excellent point, is that someone that you might give to someone that couldn't get into another situation because a lot of people can't wait.
Right.
So that's a good way. The other way that I'm seeing people do it is making your existing home a rental. Some cases, if you bought 5 to 7, 10 years ago, you have a really good low mortgage, and you can actually cash flow it. But before you go that route, you need to be talking to an attorney and your CPA, because there's definitely ramifications of making a rental. And the other thing is you need to talk to Elena here, is because if you have a high interest rate, you may want to get that refinance, and there's different ramifications when you're making that a rental property. The mortgages are higher, so you may want to get refinanced before, or talk to her before you go do that.
Right.
So that's a good way, and I see a lot of people making a lot of money if you can cash flow $1,000 a month. But take it from me, I own a lot of rentals. There's a lot of headaches with rentals, but you can also do very well. So keep that in mind.
Right.
Let's talk about consider taking a home line equity out in your home. How's that a strategy to help someone?
It's a second mortgage, which is nice to have for some flexibility on cash flow. If, for example, you want to retain a property and rent it out, like you touched on, people can open up that home equity line of credit. You hear the acronym HELOC all the time. That's just all that means, home equity line of credit. And it's specifically like it sounds. You can draw on it, or you don't have to draw on it. It's just a line that you can take money from and pay off as you see fit. That's the positives to it, because then if you would like to use that money for a down payment on a new home, you absolutely can. If you go pull $50,000 out on a high limit credit card, you cannot use that money for your down payment on a house. You can use a home equity line of credit because it is secured against a property. Very important and a great strategy. The downside to it, though, is that it is an adjustable rate mortgage. So it's certainly something that you don't want to keep open forever, but it is a great tool to use temporarily.
Okay, a little bit more complicated. We're hopping right in here. Is talk about what a bridge loan is. Do you even do a bridge loan?
We do. The rates are not super favorable on those.
What is it, and how do they use it?
So if somebody is selling a home and they need that money from the home to buy a new home, we can give them a temporary bridge loan to help purchase the new home that they're looking at. And that bridge loan is based on that sale of your current home happening. And again, it's temporary. It's not something that you want to sit in forever because it is a higher rate.
So if you want more information on that, that's like we're going to set the record for the longest podcast today. So we're not going to cover all this stuff in detail, but if you see something that catches your eye or you want more information, that's when you call us, and we're always available for lunch or coming into our office. Now, let's also consider gifts, because I see some people who they're fortunate enough to have a family member that wants to gift them some money.
Yeah.
Is that another option? Saying, all right, I can get a gift, and that way you can get the down payment, and this will lead us right into our recasting. Get the new property, afford both, and then sell this one and recast. What does that look like?
Very common. If you have family that can gift you money, you have to just know that the gift cannot come from anywhere. It can't be, like, I know it seems silly, but it can't be, your neighbor can't gift you money. It has to be a family member.
Okay, that's good to know.
That is limited, and you definitely want to talk to a lending professional about what family member specifically is gifting you the money. And it does have to be paper trailed. So that is one issue that tends to come up with gift funds, is that family member that gifts you the money has to provide their bank statement, and some people don't like to do that, but it is an absolute federal requirement. So you have to know that that's part of it. But certainly outside of that, it's very simple, and it is actually very, very common. I would say about 25% of the buyers we interact with have a gift fund coming from some kind of family member. You just have to remember too, even if you already own a home and you're selling, some people need help sometimes, and maybe a family member is there for that
temporarily.
Right. It's just temporary, and that gift is a tool for you. It's same thing with first time buyers. We see that very, very commonly.
So keep in mind that point, if you go that route, and we'll talk about recasting. We did a whole podcast on that, which was excellent. So we'll plug that above. But so you buy the other house, then you sell your house, and then what you want to look into, just kind of Google this or look into our podcast. We did like a 5-minute segment on this, recasting.
Yes.
So quickly, like a 1-minute overview. So let's just say that you bought a house, and then you sell your house, and you have funds coming in, and you want to recast. So what is recasting, and how does it work, real quick?
Recasting resets the new minimum payment on your home loan. Of course, the principal balance as well. So anytime you reduce the principal balance of your home loan, what do you then reduce? The amount of interest that you owe over the life of the loan. So anytime you have $5,000 or more to put down on a conventional loan, you can do a recast.
How much is it?
$5,000 or more.
But how much does it cost?
The cost varies. It's between $150 to $350 depending on who is servicing the loan, right? And you have to know too that can change. Certainly servicing gets sold on the secondary market.
Yeah, so it's different.
So if you've ever had a mortgage for an extended period of time, you've probably seen your mortgage get sold. And the steps will change as well, but it's always okay on any conventional loan to recast it.
I did
So
not know that.
if you get $100,000 from the sale of a home, it's very, very financially wise to put that down and recast your current home loan if
Or a
you're
portion.
comfortable with that.
Yeah,
Right.
just to kind of bring your payment down.
Yes, absolutely.
It's a cheap way to do a refinance.
It can save you $30,000 if you
Over
put
30 years.
if you put a big chunk down, and that's something that your lending professional can also help you calculate. We have amortization calculators and schedules that we can help you run through a couple scenarios on that anytime.
All right, so that wraps up Move Up Buyers. So if you guys have any more questions about that, or something caught your eye, contact us, send us a private message. So now we're gonna switch into sellers. So if you're thinking about selling, what does that look like for 2022? So the first thing is, in my mind, if you know you're gonna do it in 2022, you need to call, I think the first person you should call is your real estate professional. Interview some agents, get the best one that's going to represent you best. Hopefully it's us. Get an assessment. I mean, any competent realtor should be able to come to your house and say, here are the items. We have a book on it. I didn't bring it, but we have actually a book that I can send you for free. Kind of goes through the top 4 or 5 things that you can do to make sure that you're getting bang for the buck. Now, keep in mind, don't be going and doing weird things to your home, because in most cases, you're not gonna get the money back out. So they should give you an assessment, walk around your home and say, hey, you should be doing this, this, and this. And as we already talked about, if you're doing that now, you can get it done at a reasonable price. There's a lot of vendors out there looking for work right now just because of the winter weather. Right. Any comments on that?
Yeah, I was just gonna say, even if you just get on the books, if you need your exterior painted or your trim painted, and you get yourself on the books, the second that the weather clears up enough for those jobs to get done, you're first in line, as to where if you wait until spring comes, then of course you're going to be at a disadvantage and be further back in line. Definitely a hard lesson I've learned. Fences, that's a big thing too.
Yep. Get in and get it.
Yeah, absolutely.
Get it scheduled, and in some cases you can get it done.
Yes.
So I know there's lots of snow out there right now, but interior projects particularly.
Yes.
Because if you wait till April, I'm not sure if I can help you. At some points this year, people were out 6 to 9 months.
Yeah.
So take advantage of this. I already talked about getting interior projects done. Don't wait till spring, like I mentioned. And we always work with the best vendors. So if you're listening to this podcast, one of our subscribers, customers, you know, we are pretty thorough in vetting people who have done good work for us in the past. And we always want to link up our customers with the best people because it makes us look good. So, and also, again, if you're thinking about selling, we kind of talked about this up here under move up buyers, is know the tax consequences. Man, there are so many people who are just out there, oh, I've owned it for 1 year and I want to sell. Well, that could cause a huge problem because it's not your primary residence at that point.
Right.
So talking to an accountant, and we have all the rest. So next thing we're going to talk about, so that's a regular seller. Now if you're downsizing, so if you're thinking about downsizing, a lot of people have owned a home 30, 40 years, or their kids have moved out, empty nesters, various reasons people need to move. Unfortunately, a death in the family, and they want to, or something that is life-changing, want to look at downsizing. So what that looks like is, in my mind, I talk to a lot of people that do this, you got to get prepared emotionally. The biggest thing I see people struggle with is if they've lived somewhere for 30, 40 years, they're emotionally attached to it. Any comments on that?
Yes, I have a lot of experience with helping people through that. It's really hard. Anytime you live anywhere for an extended period, of course, you're going to become attached, like you said. But the biggest thing to look forward to is why are you wanting to move at this point? Is the property become overwhelming? Is the yard work, maintenance too much for someone to handle? Maybe you can move somewhere smaller where an HOA can help with things like that. So it's definitely important to just keep your eye on the future in terms of what those goals are and how they're going to help you. Yeah,
because I see people, particularly now, it's come up quite a bit actually with customers, and I think we're bringing that up, is people want to retire. And if you're living in a 4,000 square foot house that's worth $2 million, and you can move somewhere else and buy a house for, say, half the price or $800,000, that's a good way to get a chunk of money out. Of course, you got to talk to your accountant, and potentially retire. We see that quite a bit.
Right.
To downsize to make sure that they can eventually retire in a year or two.
Yes.
We've stressed this enough, but I got to say it one more time, is this isn't just talking to a realtor. When you're downsizing or any of these, you got to talk to a realtor, a lender, an attorney, and particularly a CPA.
Yes.
Because right now it's unprecedented the amount of equity people have built up, and you need to know the tax laws, because otherwise you can just talk to some other old realtor. They're going to sell you down, and then you're going to, when the tax man comes next April, it's going to be bad news.
Yes.
So form the team. We would love to connect you with the top professionals. That's our goal here, is always to help our customers. So when you're downsizing, you probably want to bring in your realtor and figure out, sometimes I get people in with older homes and they need a lot of work. And the worst thing you can do if you're out there is make too many improvements, because you're not going to see it out. Any comments on that? Because you probably see it in appraisals. I mean,
Definitely.
Don't live in South Meadows and just go full bore on like custom, because the comps are always going to hurt you, because most of the houses have standard stuff down there.
Right.
Any comments on that?
Definitely. If you, for example, spend $80,000 on landscaping and pergola and a lot of beautiful yard work, certainly that's a good investment if you are going to stay there for an extended period of time, but it's not something that you can ever get back dollar for dollar. And I always joke about gold toilets. I know that's not realistically something any of us get, but
I've seen them.
Well, there you go.
Not gold per se, but there are toilets that are way more, and you're just not going to, that's a very good point. You're not going to get that money out. Don't do that.
Yeah.
We want to protect it's all protected.
It's your money. It's where you're going to put it so you can get it back. Things that do get your money back can be kitchen upgrades, remodels, improvements. the biggest thing that I see actually help people dollar for dollar are the kitchens and bathrooms, certainly. And like you said, to avoid over customizing anything, just kind of go a little vanilla, beige, white walls. That definitely helps you just keep it nice and open for anyone that might be looking at your home.
If you want my book that tells you about all this stuff, it's
a lot
really
of great
good.
detail.
But I can tell you right now the top 3 things. And before you get into the kitchen remodel, that's a little, I don't know if that's in my top 4, but no, it's like she said though, if you want dollar for dollar, you're probably kitchen model and bathroom. But if you want to go less than that, because a lot of people don't, I mean, obviously there's strategies we can do, like give someone a credit for a roof or a credit for carpet. But the top things you can do, the first thing is get it painted. I mean, a fresh painted house makes the biggest difference in my, and it's relatively inexpensive compared to what you could do with a kitchen remodel. The next thing is have it professionally cleaned, and we have all these people to keep in mind. And then the next thing is, and I see it a lot, is decluttering. Actually, that should be the number 1 or 2. Is a lot of people's houses cluttered up just because you live there. There's organizations out there that we can have help you declutter and get it down so people can imagine themselves in there. Other than that, if you start getting into the higher end things, I'm just here to tell you you're not going to get that out, and I want to protect your equity. That's the number 1 thing. So then if you're downsizing, again, you have the same problem as when you're upsizing, is you have the same problem as you sell your house, where you're going to go. Because if you're moving down, there's more competition in the lower level homes. That's just, and we just talked about it with the new FHA at 537. More competition, so keep in mind that if you own a $2 million home, you're going to probably sell it pretty quickly. And then where are you going to move? So you move in with relatives. We can do a seller contingency. The other thing you can also potentially do is make your existing home a rental. And it kind of just depends on your situation. So again, get in and talk to us if you're thinking about this, but do it early in the season. Anything else on downsizing?
I just like how you just said to talk about all the different options, because before you can really make a decision for yourself, you might have some ideas of what you want, but looking at what the actual numbers mean for you personally in terms of what it would look like if you made it a rental, what it would look like if you sold it, all those things really are going to help you make that final choice. So it takes a village, truly. The team is very important. Yeah,
your team, and we're just a big proponent of getting the best people and helping you, because it's complicated, especially on the tax side and the legal side, especially if you're going to make it a rental. So then the only other thing I have on here under downsizing is, if you're at a point where you don't have a trust, consider that, and then make sure that how you want to hold title is another big thing when you're downsizing. So last one, I think we're going to break our record for the longest podcast, but this is all good stuff. Appreciate you guys hanging in there. Tips for real estate investors. Now, it's pretty hard to find real estate investments that make sense, but I'm on quite a few Facebook page for realtors and for investors, and there are people still doing deals. So I get a question is, how do I get in as an investor? So we'll go over some top things. Obviously, you got to have your team, particularly in this case for taxes, lender, because what does the lender look like for someone buying a investment home? It's a little tougher, isn't it?
Definitely. There's a bigger down payment requirement. Interest rates are higher, and of course your debt to income ratio and your reserves matter. Reserves mean any other properties that you own, you need to have a couple of months of each payment saved to show that if anything happens or you have any vacancies, you're not going to have any foreclosure issues. So the totality of all the cash due and what you have to show in savings really definitely affects how much you can qualify for. But it is a great wealth building tool if you can work through the numbers with a professional and all of that.
So that's a great point. And also, not to take away from her business, but there is some people out there that will do owner financing.
Yes.
So it's a good strategy. We can talk about that more if you're interested. If this catches your eye and you say, I want to do that. But a lot of my big time investors, a lot of their properties are, paid through, or there's a loan through the existing person that owns it, and it's a good strategy. So owner financing is.
I'm a great proponent of that. I believe in it wholeheartedly. If it can get you in the door as an investor, that is a great strategy.
And there's tax benefits to a person selling, so they don't take that tax hit all at once. So sometimes it can really make sense, and you can put a package together to make sense and help them sell the home that they wouldn't necessarily want to just because of cash. Got to talk to your accountant. You got to have a business license. There's a lot of, and you need to probably talk to a property manager if you're not willing to tackle it. I tackle all mine, and some days I wish I had a property manager, but they have all the professionals, plumbers. If something happens, stuff happens, so keep that in mind. You also want to talk to an attorney. We highly recommend, if you have any kind of assets, to have all rental properties in an LLC. If you have it in your personal name and you have any kind of accident or problem at the property, all your hard work is up for grabs. So protect yourself, talk to an attorney, but there are ramifications with lenders. I know that some lenders what happens if you transfer title into an LLC? Can that void the mortgage?
It can, only if you add on additional owners that were not original borrowers or purchasers. So like if a husband and wife are on the title of a home at the time that they bought it, and then the husband and wife themselves form their own LLC, no problem there. But if they add in a sibling or child to that LLC, then that does void their mortgage, and the note can be called due. So it's very important to pay attention to what you're doing in that situation. So,
and then the attorneys we work with actually contact the lender and say, here's what we're going to do. Is it okay?
Yes.
And it's important you do that, because you don't want to cause a due mortgage that's at 3%. Now you can only get it, if it causes due, then you have to figure out a different way to get it financed. Right. And keep in mind, when you're transferring between individuals and LLCs, you could potentially void your title insurance. So make sure you're talking to your title professional about a binder. There's different products out there that you can purchase that allow you to switch it.
Yes.
So, the biggest thing is to make sure you run the numbers, make sure it pencils. Saw too many people in 2005 and 6, taking losses on rentals. I would not be buying a rental, in my opinion, if you're taking a loss every month, because it adds up. And then if you lose your job, then all of a sudden you are too many bills going out. So if it doesn't pencil, in my opinion, I'd rather protect you and go do something else. If you don't, obviously it's not the right property if you're taking a loss every month.
Right.
So look into that, and we can help you. We have some calculators, but ultimately it's up to you to figure that out. And that's about it. So if you guys have any other questions, it's been fun, this podcast. She's been a great guest. I really appreciate her staying around for 42 minutes. We have a lot of great information. Would like to contact you if you're another professional in the business and interview you. That's something that we're looking for moving forward into 2022, is open it up to other people who are in the real estate profession. We've done home stages, we've talked to accountants, but if you're out there and you have a business, a great idea, and it's real estate related, I would love to contact you and get you on the podcast. So any last words?
Just to touch on that, I think anytime you can put some time into helping educate your community, you're giving back. So anyone that is willing to come on to the podcast with Ken, just consider it a part of your giving back, and help people sitting out there wondering and that have questions, and putting your professional perspective into an advice format, because you holding all this information in your mind is not helping anyone. So getting the word out there is very important. Yeah, and that's what we're all about, is educating people and trying to make our clients make the best decision. That's what this is all about, and helping people. So Happy New Year. Wow. It's 2021's wrapping up. It's been a great year for us, and I know, talking with Elena beforehand, it's an honor to help everyone out there. We have great clients, and we look forward to big things in 2022. Yeah, financial goals are coming, so talk to us anytime. Great. Well, Happy New Year. We'll talk to you soon, and if you like our videos or content, please thumbs up, subscribe to our videos, and leave us comments. Until next time, take care and see you in 2022.